Good morning, everybody. We are live. Welcome to the pre-market overview, August 20th. Thursday is the day today, so happy Thursday all. I hope you're having a good trading week so far. So for those that are new, just to introduce myself, my name's Becky. You can email me, becky@tradewithufos.com, if you have any questions about what we cover today. Always better is the support team. So email those guys, support@tradewithufos.com. They're a team, so normally quicker at responding. The whole team are traders as well, so we're always happy to help with whatever questions you have. Again, for those that might be new, just to explain what we go over on the pre-market overview, what the point is. So every day, Monday to Friday, we send out a newsletter. That newsletter contains information for 4 of the major markets in the world. So we look at the S&P, oil, gold, and the euro US dollar, and we look at climate, basically trend. We look at how long we think it's going to go in that trend for, where price might turn, volatility, and news as well. So we cover a lot on the newsletter. That's why we do the pre-market overview, to just expand on it a little bit, explain the concepts a little bit more, show you how we came to the conclusions that we did with the technology that we use. So I'll spend 15-20 minutes just explaining that. If you want to subscribe to the newsletter, you can email us newsletter@tradewithufos.com, and we will put you on that subscription list, and you'll get the updated document every day. Now, a couple of reminders for those that are joining us from within the Tradewith channel. Today is a Thursday, so we have stocks and investing today at 9 a.m. and then 1 p.m. Eastern respectively. Mondays, Wednesdays, and Fridays is when we have our futures and option sessions, and then sharpening sessions over the weekend. In terms of upcoming live courses, I say upcoming, psychology is happening right now. We're in the middle of that class at the moment. After that, we have futures that will start on Saturday, this Saturday coming, then trading plans towards the end of the week, end of the month, and then back testing at the end of next month. Now, I just need to put the disclaimer up there on the screen there. It's a long disclaimer. Not going to read it. It would take me forever, but you can obviously mute me if you'd like to read it, or you can pause it and read it if you like, or come back to the video later, or go to the website www.youcantrade.com so that you can read it fully if you would like to do so. Basically, in a nutshell, effectively what we're saying is you do need to be aware. Of course, there is a risk involved in trading that you need to take on for yourself. It's you that presses the button, so you need to be aware of the risk involved. What we show you is educational ideas. It's not trading tips, or it's not advice. It's a demonstration of how we use the product. Okay, so now that that's done, let's go and have a look at the newsletter. So this is what we send out every day. And on here we can see the 4 major markets in the world, or 4 of the major markets in the world: S&P, oil, gold, and the euro. Now, the euro, when looked at as the euro US dollar, is the highest traded currency pair in the world. The US dollar itself is responsible for about 80% of transactions worldwide every single day. So we've covered a lot of what goes on out there in terms of volume in the market, specifically with that last one. But of course, the S&P is one of the major equity indices in the world, and oil and gold are also very popular commodities. So whether you trade these markets directly or not, they often have a big impact on what happens in general out there in the markets. Now we look at a daily time frame for each of them. Now, whether you're a long-term trader or investor, or a short-term trader or scalper, often the daily does fall within some form of analysis that most people do. Obviously, bear in mind, different things happen on different time frames. So if you don't use the daily at all, then of course this might not be as relevant, but the daily is a very common time frame to be used. Now, for each of the markets, what we're going to do is we're going to explain the climate, meaning what direction are they going in, what trend are they going in, but more importantly, what are the probabilities associated with that. We're going to look at propagating, which tells us how long does that market normally go up for? How long does that market normally go down for? And where are we now into that relative movement? So everything on the right-hand side tells us the average statistical movement to whatever direction we're going in. And on the left-hand side, it tells us how far we are into that move. We then want to look at nearest UFOs. So UFO stands for unfilled orders. That means where we expect there to be buy orders in the markets that could push price upwards, or sell orders in the market that could push price downwards. We use our Auto UFO app to help us find this on the chart and show us where those buy and sell orders are likely to be. We use the Auto Climate app to help us with the climate and propagating. So we're using technology to put as many odds in our favor as possible, to be objective with its analysis and give us statistical likelihoods and probabilities. Now, of course, nothing's guaranteed. Just because something is probable doesn't mean it's definite. So we still need to manage our risk, make sure that we keep that under control. But again, it's just about putting as many odds as we can on side. So once we've gone through climate and propagating the nearest UFOs for each market, I'm going to come down, or actually do it per market, and we'll look at volatility as well. So volatility just means how fast we expect markets to move, or how far we expect them to move within given periods of time. So we get the main data from the current implied volatility numbers. That's what we see here. You'll see that each of these are a percentage. So what these numbers represent is the expected movement up or down in 1 year as a percentage of its current value. So these numbers come from the options pricing of these markets. So professional traders are the ones out there trading options most of the time, especially in these major markets. And when they're buying and selling, and therefore setting the price of the option, inherent in what they're willing to buy and sell it for is the risk they're willing to take based on how far price moves or how quickly it moves. So basically, these numbers reflect what professional traders think. It's their expectation of volatility. So we use those numbers there. From that, we can then reverse engineer it to understand what we expect in a day, up or down, in a week, up or down, or in a month, up or down. So again, gives us an expectation based on professional traders' opinions as to the movement we could expect in the markets. So we'll go through market by market. Once we've done that, we'll come down and talk about news, although there's not actually much to talk about today, and then we'll round off. Okay, so we're going to start with the S&P. We are using SPX.X. That is the symbol on TradeStation for the index. Okay, so we see here the S&P. Now at the bottom here, this is our Auto Climate app. This is the technology we use to help us determine trend and, more importantly, probabilities. So the Auto Climate app shows us one of three things. It can either be a thick blue dot, that's what we see here. Thick blue dot tells us we have a confirmed upwards climate. We have an uptrend, it's moving in an upwards direction, and that we have probabilities to the upside. It could show us a thick red dot, which means we have a confirmed downwards climate, downwards trend, it's moving in a downwards direction, and that we have probabilities to the downside. Or it could show us a thin dot of either color. The color will still tell us the direction, but the fact that it's a thin dot is telling us that there are less probabilities, less statistical advantage, which means most of the time we're going to choose to do nothing as traders on those days, because why would we want to put money at risk when we don't have statistical advantage? So in this case, we have a thick blue dot, so confirmed upwards climate, probability to the upside. We can see our closest stack of buy orders is highlighted to us here by our Auto UFO app, showing us a buy UFO, a green UFO, and the numbers for that are 3294.61 to 3284.53. That's the closest stack of buy orders that are likely to push price back up if price were to return them. Now, we don't actually have any sell orders above us on the S&P because we're pretty much at all-time highs. There's nothing above us, which means no sell UFOs, no sell orders to speak of at the moment. Now, when it comes to the climate, we saw we had a confirmed upwards climate. We show you that here by showing you an upwards pointing arrow, a green upwards pointing arrow. By the way, if it was unconfirmed, we would put a little cross there. It would look better than that, but we would put a little cross there so that you could tell that it was unconfirmed. Considering it is confirmed, just the arrow letting you know they're confirmed upwards climate. Now, we would normally expect that the S&P would go up for 10 candles in a row on a daily chart. By the way, I'm rounding that number up. Whatever the decimal place is, on all of those numbers on the right-hand side, I'm going to round it up. So normally it goes up for 10 candles, and we're on candle number 15. So 50% overextended to the upside, meaning we have surpassed what is statistically likely by 50%. Now, that's not to say that we won't continue to see that happen. As we know, we have no sell orders above us. We have, no indication really of price turning, but we have gone past what is probable to happen. The further we go past what is probable to happen, less likely it is to happen, right? So we lose probabilities there. So yes, we have buy orders beneath us. Yes, we have a confirmed upwards climate, but we are lacking probabilities when it comes to the continuation of that move to the upside based on statistics. Okay, so in terms of movement on the S&P, we look at VIX.X, we look at the VIX, and we see from that we would expect movement up or down in 1 year of 23.64%. meaning in one day, a movement up or down of 50.26 points. In 1 week, a movement up or down of 110.64 points. And in 1 month, a movement up or down of 230.31 points. Okay, so that's the S&P. Moving on to the next market here, we are going to look at oil. So we're looking at CL, which is the continuous futures contract for oil. At CL. Just need to move the chart a little bit so we see what we need to see. I'm going to try and unsquish it, see if I can fit in. There you go. So once again, thick blue dot, our Auto Climate app telling us we have a confirmed upwards climate, probabilities to the upside. Closest stack of buy orders is shown here by the green UFO, 26.31 to 25.80. We can see it's on top of another one. So we have 2 buy orders there, just or 2 stacks of buy orders on top of each other. Closest stack of sell orders, that's what's shown here by our red UFO, 53.83 to 55.71. That's the closest stack of sell orders. Now, as we can see, we are kind of just in the middle there, in the middle of nowhere, not really near any stacks of orders. We haven't really had any stacks of orders in the last few weeks, which is why price really hasn't done very much. As soon as we have buy orders or sell orders, they get taken out quite quickly and disappear. So that's why we're just sort of floating around there in the middle. So really, it could go either way. It could shoot upwards, it could shoot downwards. There's nothing close by on daily chart to stop it. Now, in terms of the expected movement to the upside, we had a confirmed upwards climate. Normally, oil would go up for 7 candles, and we're on candle number 8. So just past what is statistically likely. As we said, we have no sell UFOs to stop us continuing to go up, but we also have no buy UFOs continuing to push us up. So at the moment, there's no real probabilities either side. We have a confirmed upwards climate, but we've gone past the statistical likelihood of it continuing. And we have no orders either side really to push it one way or another. So it'd be interesting to see what happens here with oil where we've got no clear direction really being shown to us. Now, in terms of volatility on oil, we use OVX.X, and we see that we would expect a movement up or down in 1 year of 32.85%, meaning in a day, a movement of 0.88 points. In a week, up or down of 1.94 points. And in a month, up or down of 4.05 points. Cool, so that's oil. Let's have a look at gold. That's the next market. So we're going to look at GC. That's the continuous futures contract again for gold. So at GC. So we saw it looked more significant the movement on gold here yesterday when Boyan did his after hours review. This was just one. It was kind of like this. If I can draw the line. Just one big red candle there. And it wiped out our buy UFO from yesterday. So we see now we have a confirmed downwards climate. So the climate went from confirmed upwards to undecided to down. So we now have pressure there to the downside. We've got a thick red dot. That's how we know that it's a confirmed downwards climate. Closest stack of buy orders, the closest one is now here, 1836.7 to 1825.9. Closest stack of sell orders just here. Looks like we literally just missed it. Just came shy of touching that UFO. 2039.7 to 2060.8. Okay, so we've just started this move to the downside. Normally, price would go down for 5 candles in a row with gold, and we are on candle number 1. So statistical probabilities of it continuing to the downside. Now we've got a confirmed downwards climate, statistical probability of it continuing to the downside, and at the moment kind of in between the buy and sell UFOs. So it looks more like we have pressure to the downside here, although of course sometimes new orders come into the markets and change things, like to play with us. So again, manage your risk, nothing is definite, but it looks like here more probabilities to the downside. In terms of volatility, we look at GVZ.X or GVZ.X. And we expect a movement up or down in 1 year of 28.15%, meaning in a day, a movement up or down of 34.4 points. In a week, up or down of 75.8 points. And in a month, up or down of 157.7 points. Okay, last market, we're going to look at the euro. So euro US dollar, that is the world's most voluminous currency pair. Voluminous, if that's a word. Most volume moves through that currency pair. So let's have a look here, see if we can see everything. Brilliant. So we have a thick blue dot, confirmed upwards climate, probabilities to the upside. We have our closest stack of buy orders just here, We did have one around here yesterday, but it looks like that got taken out. So now the closest stack is 1.1597 to 1.1507. Closest stack of sell orders is just here, 1.2344 to 1.2414. Okay, so in terms of the movement to the upside, we had a confirmed upwards climate. Normally, the euro US dollar would go up for 5 candles in a row, and we're on candle number 6. So once again, just slightly over what is statistically likely here. Again, doesn't mean to say that we won't see that continue to happen. We obviously saw up here with the S&P that we've gone quite far overextended. That's not to say that it's a cap or a limit, that it can't go past that. It's just saying what is likely to happen, what the statistics tell us. So again, we've gone slightly past that. We're losing probabilities there, but we did see, if we just go back to the chart here, that we have loads and loads of buy orders on top of each other. We have a thick blue dot and we don't have sell orders for a little way there. So it does look like we still have room to move to the upside, although bear in mind we are overextended. We don't have as many statistical advantages or as much statistical advantage as we would have maybe earlier on in the week. Okay, so coming down to volatility, we look at EVZ.X or EVZ.X, and we expect the euro to move up or down in 1 year of 8.51%, meaning in a day, a movement up or down of 63 pips. In a week, up or down of 140 pips, and in a month, up or down of 291 pips. Okay, so that's the as far as it goes with the technology, looking at the markets in this way. Of course, the volatility figures give us an idea of how far we expect price to move within given periods of time. The Auto Climate app gives us an idea of in which direction we're likely to see that movement and for how long. And the nearest UFOs give us an idea of where price could turn, where there could be big stats of order that makes price go the other way. Okay, so those are direct forces. What I mean by that is that the most direct forces we have to move price up or down are buy orders and sell orders. That's all there is. That's what moves price. But of course, there can be many reasons as to why there are buy orders and sell orders. So we do need to be aware of indirect forces as well that could have an impact on the markets. So we look at news, we look at high impact news that could be likely to increase volatility in the markets or to have a high impact on them. Now, this week, the only high impact news we had came out yesterday. You can check the report. If you go to the link, you can check the report if you'd like to read it. And that was the FOMC yesterday. Other than that, there's nothing much else coming up this week. There wasn't anything on Monday or Tuesday either. We see this by going to fxstreet.com/economic-calendar. We filter high impact news and US markets. So, of course, if you trade outside of those or you want to see information from outside of that criteria, you can go to the website, change the filters there, and you can see whatever you want, different countries, different impact news. But for us, for now, for this week, there's nothing much going on. Okay, so a couple of reminders then for those, again, that are joining us from within Tradective. The next upcoming live class we have is the futures class. That starts on Saturday. We have register for any course and choose an additional one for free. So buy one, get one free situation. Now, the second one needs to be of equal or lesser value than the first one that you pick. So go to the website and see what we do and see what makes more sense for you and put it together in such a way where you make the best out of that offer. For those that aren't part of the Tradective channel yet, you can join us at Tradective/you-can-trade. You have 14 days to try us out. And that's where you'll have access to our stocks, investing, futures, options, sharpening, psychology sessions, and support and the resources that come with that as well. So you can try us out for a couple of weeks and then go from there if you like us. If you have any questions about anything, you can email us at support@tradective.com. Otherwise, I'll be back in the morning. Today, you have the stocks and investing sessions within Tradective, as well as at 4:15 p.m. Eastern. My colleague Wayne will be looking at what did happen in the markets, what went as expected, what didn't go as expected, what can we learn from it, and what can we take from what happened. So that will be 4:15 p.m. Eastern. Otherwise, if we don't see you in those sessions, I'll see you again tomorrow morning. Have a great trading day, guys.